Well, hello, traders and investors. I'm LA Little, and this is your daily NeoTA wrap, where we take a look at these markets, and we do it from a neoclassical perspective. Each time we're asking ourselves what happened today, and what does it tell us about the coming ones. I do this show 4 times a week, every Monday through Thursday. It's broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube. It is on the channel LA Little. If you'd like to subscribe, it's easy, fast, and keeps you up to date with what's happening, because anytime content is pushed, you get a notification. All you gotta do is reach up there and hit the subscribe button. As far as what happened today, let's take a look at the numbers. And when looking at those numbers, what you see is a pretty good bounce back here in the DAX. The DAX had been hit pretty hard. You get a 1.5% move. But really in the context, and we'll look at the charts, it doesn't really mean much. Gold had a bump back up today. Silver as well. Oil down again. Let me see, where's oil? 2.29. Oil's coming right back down. If you look at the West Texas Intermediate Crude futures contract, it's right back down towards the lows. It's almost there. The Nasdaq, the Nasdaq and the NDX were up. The Russell, the S&P, the Dow were all down, and they all gave up huge gains or big gains by the end of the bell. Hong Kong, this was closed market, so is China's got the week off. So does Hong Kong. I was looking for the Nikkei here. I guess I don't have the Nikkei up here. It was down again last night, breaking out the lows. Let's look at the charts and see what we got. And actually, before we do that, I actually want to take a comment from that was posted last night. No one knows which way the market moves from day to day period. That's not really true. And I know that nobody's going to be able to present on a day-to-day basis exactly what's going to happen the next day. But the market is supply and demand. And if you know where the significant price points are, and if you see test into those price points, you can get some sort of an idea about what's happening. That's what I show you on a nightly basis here. And so to say that there's no way of knowing anything is to simply say that you just have to be invested all the time because you can't time anything. That's nonsense. You can time the market to some degree. Are you going to be right all the time? No, you're not. Are you going to be right the majority of the time? If you know what you're doing, yes, you are. And if you've watched this show long enough, you know that most of the time, not most of the time, let's say about 66, 70% of the time, I don't know exactly what the numbers are, but I know that more often than not, these calls I make on a nightly basis here are on the mark. More times than not, and certainly within reason for one to be able to trade them and use them to make decisions, rational decisions about what to do. The market leaves trails. It isn't just random, folks. Big money has places where it's going to put more money on the line, or it's going to withdraw and assume it was wrong. It's just the way it works. So let's take a look at the charts tonight and see what we got. Now I'm going to start over in Germany. Now I'd already told you or suggested on Sunday night that Germany was going to have problems because they had broken multiple swing points on multiple time frames. One of the time frames they broke was here, and that was on Friday. And that break right there, that's going to create problems, and you're going to see some sort of an extension to the downside, which is what we're already seeing. Typically going to see 2 to 3 bars to the downside on the longest time frame, and that's going to be on the weekly time frame. They get a bounce last night. Volume expands up until that bounce, and now you get a little bit lighter volume. You can see it's kind of a doji bar. It's not a they didn't close on the highs is my point. Germany's going to try to do an ABCD structure down. Now, if it's going to bounce and get back up into this area, it's going to be a little bit stronger than I would expect. So if you're looking at this neoclassically, you're expecting some sort of a bounce somewhere as a result of the fact that this thing has been so beaten up in a straight down move, right? And so you get a little bit of a bounce here. Let's see if it carries. Let's see if it can carry back up to here. If we're doing it neoclassically, odds are it won't, at least not yet. Later on, potentially, but at least not yet. The odds are pretty good that it's going to continue to try to trade down. If it does that, the U.S. market's going to have a hard time as well. So let's pop, well, actually, while we're on this, let's look at the CACs real quick to see what it looks like. It's probably about the same. Yeah, tested. Now the CACS actually gives you a test. So swing point low bar has 1.6 on it. You test into it with 1.5. So you actually, so look at what you're doing here. What is the market telling you? Well, as you come back up on price, right, you get over or back into that swing point low. And so as you get back into the swing point low, the volume that you're doing on the swing point low versus the one coming back into it, you have lighter volume. That says the buyers are unwilling to buy at those critical points. They kind of step away. You can see it traded over it and then back under it. So you step into it, the sellers reassert themselves, and the buyers kind of start to disappear. You also get over the bar prior, a lot less volume, right? This is going to try to come back down and test towards the low again. That's what it should do. What you're always doing in neoclassical is you're looking for tells, you're looking for significant price points where you know what the odds are, and you're seeing how it trades into those. And it will release information when it does it. And you use that information to make your next move. That's neoclassical. That's reading the tape. That's not just guessing. That's what we do here, and that's what you see me do on a nightly basis. Let me quickly take a look at the Nikkei while we're here. I think the Nikkei broke down last night under the lows, and it did, and volume expanded. Nikkei's going to try to continue down. Right? Maybe you get a bounce here because you're extended already, right? Because you're always on neoclassical, you're always looking at three things. You're looking at how fast the moves are. You're looking at what, a compressed move, and this is fairly compressed. You can tell that by looking at the angle of the decline. You're looking at how fast it happens, how far it goes, right? Where the significant price points are, those are the zones, and what those tests look like when they get there. For example, last night, you tested, actually the night before last, this bar, you tested this bar, almost got to the low, and you're pushing more volume. What does that tell you? It's probably going to break it. What does it do today? It breaks it. Breaks it with much more volume, right? What is that? That's all the people had stops down there getting stopped out, and that's others joining the party on a short sell to try to take it lower. Now, can you get a bounce back? Well, if it was just stops, not new sellers, then you may get the bounce back and you may get the test. But you may just simply extend. And the reason you may do that is because if you look over here on the weekly, right, you actually have a swing point low here that's being broken as well. If that swing point low breaks on a weekly basis, you're going to have breaks of multiple time frames on this issue, and that says that you could get an extended move directly without any sort of a bounce, any significant bounce, right, on the weekly time frame. That's the Nikkei, that's Europe. So what are they telling us? They're telling us that you're going to try to go lower. Let's go look at our markets. And let me grab it here. And we'll pull up the S&P 500. We'll start there. And so on the S&P 500, what do we have here? So we got a day, and so here's another tell, right? This is the high of the low. We know that's a significant one. Why is it? Because it's a wide price spread bar, and it's high volume. That gives it more significance than most bars on this chart. So you pay attention to that bar. When you get into the bar, which is what we did the last 2 days, and now today, what do? Look at your price points. I'll point them out for you. 1889.85. Today you get to 1881.60, and that was 1876. So you get over it. You have a lot less volume as you're testing back into the top, and you finish on the lows. What does that tell you? Buyers are unwilling to buy at these critical price points. Where's the critical price point? Top of that bar. Where does it go to? Top of the bar. How many shares trade compared to then? A lot less. What does that suggest? Going down. Period. That's the way you read it. Like it or not, that's the way you read it. NASDAQ. Let me see what this one looks like, because I think we did the same thing here, and we did. We tested back. Now the NASDAQ's a slightly different case because the NASDAQ has already broken the swing point low. Now there's a concept in neoclassical that talks about a retest regenerate. What is that? Well, when you break a swing point low, you measure up the top of the swing point low, the bottom of the swing point low, and you see if it tests back into it. If it does test back into it, and if the market's not extremely weak, right, you can, and in this case because we're going down, right, you can see this thing get to the other side of the bar because it's within 6 bars, time again. But what did this do? Rather than trade up here and stay up here to give it a chance to get up here, it instead trades into it and what? Closes underneath it again. What is that telling you? Buyers unwilling to buy at this critical price point, right? They're into that bar. They're unwilling to continue to buy. They sell it off by the end of the day. Again, this is a failed attempt to get up at least to the top of the bar and potentially above it. What's it going to do? It's going to try to regenerate lower. That's what you should expect it to do. And you should expect it potentially to do it tomorrow. I don't know that I need to read many more charts here. I've already, 10 minutes into it. I try to keep these to 10 or 15 minutes. I am going to take a quick look at the OX markets, in particular at the currencies, because the currencies are really driving things both in Japan and Europe. And so if we look at the Japanese yen to start with, Japanese yen has been on this spike higher. As they go higher, that's putting pressure on their equity markets. They spike it again today. I didn't look at the numbers tonight. I suspect they're going to continue this move. They've got a little huge squeeze going on, shall we say, instead of little. Let's look at the weekly. You're way over this boundary, right? So this whole range is broken down. So if you just take the range, and there's like 2 ranges in there, right? If you take those ranges and expand it up, that's where it's going to try to get to. That's a projection number. So expect it to try to get up to here, and until it gets there, it's going to keep putting pressure on the Nikkei. So I would expect the Nikkei to be weak again tonight. If we look over at the Euro, you've got the same situation going in the Euro. If you remember, for so long there, we were talking about the Draghi bar. We were talking about this bar as being the key bar. And what I told you back then is that when one of these sides break definitively, right? Because what happens when you go sideways? You start building up swing point highs. When you take them out, you're going to get an accelerated move or an attempt to do an accelerated move. And in this case, you've got an ABCD structure to the upside. You've got a big push back down today off of Yellen, and then it flipped it around, did a hammer reversal. This thing wants to go higher. If this goes higher, what is that? That's the euro going to pressure the European markets, which is going to pressure the U.S. markets, and it's actually going to put juice back into commodity stocks, most likely. And if we look at, say, GDX, the gold stocks, you saw they reversed again today. They're going to go back up and try to test the top of their range, which, when they do it, is going to give you more information, and that's going to give us information about whether this is a big range now, right? Probably there, versus are they going to break it out and just take it higher? And that's going to be the test on this top where the volume is as it gets there. How do you measure the test? You look to see what the volumes look like when you get there, and you see if there's new sellers appear, or shall we say buyers disappear, unwilling to pay higher price, right? Because they're not sure if they can sell it at even higher price. And so they may back away when they get up there, which would set up the range trade. But you can't know that until the test takes place. What you can know is that more than likely, given this kind of a spurt, 4 days in a row, huge move, they're probably not going to just walk away. They're going to try again, and that's what they're doing. Folks, that's it for tonight. If you like what I do, maybe you want to look at what I do in more detail, come over, hit the Get Started button, get started. $19 a month. It's nothing. One trade, pay for all year. Have a great one. Take care, and I'll see you next time. Good night.